Welcome back. Earlier today was reported U.S. payrolls rose by 199,000 in November as the unemployment rate falls to 3.7%. The 199,000 number is slightly better than the estimates of 190. But what we're going to see in the moment is that even though this is a little bit better than estimates, the average hourly earnings is a little bit disappointing. Now we can see over here non-farm payrolls, 199,000 jobs created in the month of November. This beats the prior month. However, excluding the prior month, this is almost the worst number we've seen in quite a long time. In the old days, we would talk about non-farm payroll numbers, 300, 400,000. That was the number we needed, even 500,000 in order to sustain economic growth. 199 is better than last month, but certainly nothing really to write home about. We see here non-farm payroll on a year-over-year basis down 31%. This is compared to November of this year to November of last year. And we can see that we've seen a decline. Every single candlestick is negative, which means this year's non-farm payroll is worse on a year-over-year basis than the same month last year. Unemployment rate fell to 3.7%. A lot of analysts are saying, well, this is a great thing. It's good that the unemployment rate declines, but we're at 3.9, that back down to 3.7. Really no change for what we've seen for the past really several years or so. Now notice a correlation to the S&P 500, negative correlation. As stocks go up, we would expect the unemployment rate to stay steady in the lower area, which is the case. However, we really don't see any kind of progress at all. It's the same situations we've seen pretty much for the entire year this year as well as last year. Here's the unemployment rate on a year-over-year basis. That's up 2.8%. So comparing the unemployment rate November this year to November last year, it's risen, which is not a good thing. We want to see the unemployment rate decline. We're now in positive territory for the past 3 or 4 months in a row, which means we see slightly more unemployment this month this year compared to this month last year. Labor force participation rate at 62.8. It's not where it was pre-pandemic. It's approaching those levels, but over the past 4 months or so, it really has remained, somewhat unchanged. Labor force participation on a year-over-year basis up 1%. That's good. Now we like to look at these things on a year-over-year basis because, well, first of all, it's very seasonal. December is a much different month than August in terms of employment, housing, inflation, and many other economic numbers. But it also gives us a lot more of a fair comparison to compare November of this year to November of last year. This, I would say, is a positive development that the labor force participation rate is rising on a year-over-year basis. Average hourly earnings down 4% or at 4% on a year-over-year basis. This is probably one of the negatives of this report. We can see it continues to really decline since late 21, early 2022. We want to see the average hourly earnings increase, especially in light of the inflationary pressures. And we watch CPI and PCE and PPI, the inflation numbers. Since 2021, those numbers have really increased quite dramatically. At the same time, average hourly earnings decline. So we can imagine taking a look at these numbers that as inflation increases, it's our spending power, our buying power really has declined, especially considering inflation. And then we see here the unemployment rate. This is a state average. Now, first we take a look at the unemployment rate that's measured in terms of on a federal level. Then we can take a look at the individual state unemployment rates and then take the average of all 50 states divided equally. Of course, it's not population adjusted, so to speak, where the national average is. But we can see an increase to 3.3%. It's still below the federal 3.7%, 3.9%, that we spoke of, but it is increasing. So if we take a look at the states on an even basis, the 3.3% level is something, not really to celebrate. We'd like to see this number go down. And certainly that's something that we're going to have to watch moving forward. So to sum up, the non-farm payroll, 199,000 jobs. It's not awful. It's not really great either. In light of the fact that the Federal Reserve has pretty much taken all interest rate hikes off the table, this confirms that bias that they should not be looking to raise interest rates in an environment where the employment conditions really are struggling to improve. It's a lackluster number at best, but we're going to, keep track of this very carefully to see for any significant developments along the way. We hope this has been helpful. We look forward to seeing you back soon.